A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Biotech ETFs are on the rise. We are going to find out why with our ETF Research Director, Nina Mishra, who joins me here at the desk. So why all of the, we'll say, excitement over these biotech ETFs?
So these biotech ETFs have done really well in the past few weeks, and there's so much good information about companies in the sector that you will see that this slide actually looks very busy, and I actually put very few very recent developments only over here.
Wow.
But basically what is happening that we have seen rise in mergers and acquisitions because big cash-rich pharma companies, they are acquiring smaller, innovative biotech companies to boost their pipelines. And just today it was reported that Merck is acquiring Aquil and Sanofi is acquiring Synchrox, and both these companies, Aquil and Synchrox, I don't even know if I'm pronouncing them correctly, they are clinical stage cancer drug companies, and both those stocks have surged more than 100%. Aquil more than 100%, Synchrox more than 160% this morning. Then last week it was reported that Novartis is buying cholesterol drug maker. It's called the Medicines Company, and that deal is for $10 billion. The above two are for $2.5 billion and $2.7 billion respectively. Novartis deal is for $10 billion, and this cholesterol drug is suitable for patients who do not respond well to the older statin pills. And then there have been some very encouraging studies and approvals. We saw that Biogen stock soared recently because it reported some new data and very encouraging data on Alzheimer's drug. And then CRISPR Therapeutics stock surged when it reported positive development in gene editing progress. And CRISPR is actually the best gene editing technology, and there's so much potential for that technology because that works like molecular scissors. So you can basically snip out small portions of DNA, and you can make changes in a small spot in the genome without making any other unintentional changes anywhere else. So that is why there's
kind of
scary and a lot of potential too. Then Aurinia's stock surged last week when it reported positive results for its lupus-related drugs. Global Blood Therapeutics therapy for treating sickle cell diseases was approved by the FDA. Now, because a lot of innovative work is being done by mainly smaller, many clinical stage biotech companies, so obviously those shares have surged more, particularly those which are being acquired. But investors should remember that those smaller companies are riskier too.
Yeah, so the big dogs buying up the smaller companies, that's one way to get rid of the competition, but you can only do that so often,
yes,
right?
That's true.
Before the momentum then begins to level off, I would think.
The new smaller companies will come up with more studies, more results, more therapies.
More companies to be taken over.
Yes.
All right. Let's take a look at some of these. There's ARC Genomic Revolution Multi-Sector ETF.
So as I mentioned, smaller companies are doing better, so that is why the best performing ETFs in the sector are the ones that focus on more innovative and smaller companies.
And now you've got the Alps Medical up there, right? Because I said ARC. Did I misspeak?
No, I think the order of the slides was changed.
Okay.
So anyways, this is Alps Medical Breakthrough ETF with the ticker symbol SBIO, SBIO. This is the best performing biotech ETF year to date. It focuses on small and mid-cap companies which have drugs in clinical trials. 50 basis points for expense ratio and 205 million in assets under management, up 44% year to date. To learn more, you can go to the quote page on Zacks.com, and from there you can go to the external homepage for this particular ETF and learn more about how they include and how they weight companies in the portfolio. And you can also look at the holdings. As I said, these are mainly smaller companies. Global Blood Therapeutics is one of the top holdings, which I mentioned. Their therapy was approved recently by the FDA.
Okay, I'll let you tell us what's next. There's ARC.
So ARC has an actively managed ETF focused on genomics. So basically gene editing companies like CRISPR Technologies and others. Because of active management, it charges 75 basis points, so slightly more expensive. Still quite popular, 470 million in assets under management. This is up 41% year to date, and it has done pretty well in the past years too. Again, to learn more, you can go to the quote page and to ARC's page for this particular ETF and learn about its holdings. As I mentioned, CRISPR reported very encouraging data. It is a top holding which helped the ETF. Then Invita, Alumni, Intelia, these are the other top holdings in this ETF.
Then we have Virtus Life Science Biotech Clinical Trials ETF, right?
The ticker is BBC. This focuses again on clinical trial stage biotech companies. This is a little bit more expensive, 79 basis points, and smaller too, just 30 million in assets under management. So if you like this ETF, please place limit orders because liquidity is going to be very low for this particular ETF. This is up 39% year to date. You can go to Virtuous web page for this ETF through the quote page on Zacks.com. Now you will see the top holdings. Now this particular company, ChemoCentrix, it surged on reporting positive data regarding a drug which was used to treat inflammation disease, and the other Caropharma also reported very good results. So that is why these two top holdings have done very well recently, and this is one of the top performers in the past month or so.
All right, and finally the SPDR S&P Biotech ETF.
Now, if you want to limit your risk, because I mentioned that smaller clinical stage companies are riskier, so you can take a look at the broader biotech ETF, and due to equal weighting, it does not focus only on heavyweights in the industry, but has equal tilt towards smaller, more innovative companies too. It follows modified equal weighting. It is the cheapest within the space with just 35 basis points in expense ratio and pretty good size of assets, $4.4 billion. It's up 30% year to date. And like earlier, you can read our research report on this particular ETF. Go to the quote webpage, SPDR's webpage for this ETF. Learn more about its sector exposure and portfolio holdings. If you look at the holdings, Arrowhead Pharmaceuticals, medicines company that we talked about earlier, Seattle Genetics, and Intercept, these are top holdings in the portfolio.
And how do they all compare?
So on this chart, I have the performance of the all four ETFs that we discussed today, and the market cap weighted biotech ETF that we did not discuss today. So smaller companies have done well. So the first three ETFs that we discussed are up between 38% and 43%. The equal weighted ETF is up about 29%, which is again better than S&P 500's performance of about 25% year to date, whereas the market cap weighted ETF is up about 23%.
Do you own either of these?
I do not.
Okay, thank you for the update on biotech ETFs. Don't forget, if you would like more ETF information, articles, commentary, etc. It's in the ETF section of our website, Zacks.com. Go to the homepage, use the Funds tab in the top toolbar. It'll help guide you there. And if you can't watch these videos with Nina, you can always listen to her on her ETF Spotlight podcast. That's obviously in the podcast section of our website. Homepage, Zacks.com, all the way down to the bottom. Click on the word podcast, and it will help guide you to that section. Don't forget, if you haven't already checked it out, for a limited time, you are invited to take a gander at market insights from Zacks, like buys and sells, commentary, and also take a look at recommendations from portfolios that up to now have been closed to outsiders, open only to subscribers. You can do it for a limited time. You can do it for just $1. All you need to do for more details, go to Zacks.com/promo. With Nina, I'm Terry Ruffalo.